crucial. We start off on the West Coast this afternoon, honing in on some of the activity we're seeing on the Nigerian market side of things. On Friday, we had Stanbic IBTC, the Nigerian unit of South Africa's Standard Bank, saying its pre-tax profit fell 9% to 3.4 billion naira for the first 3 months of the year. The bank said gross earnings grew 11% to 14.3 billion in the period compared to the same period last year. For a closer look at these figures now, we speak to Chris Newson. He's the CEO of Stanbic IBTC Bank and joins us live from the trading floor over on that end. Chris, good afternoon and nice to see you again. Let's get straight into the numbers.
Hi,
here.
Alicia.
We've had a profit after tax decreasing about 3%, and speaking to some of the market commentators out there, they're saying these numbers largely in line with market expectations. Run us through what's driven your earnings or your performance through the first quarter.
Hi Alicia, good to be with you again. Through the first quarter we've seen a marginal growth in the balance sheet, and that's really a function of one, a slightly slower growth in risk assets than you might have expected. However, it is a tough market out there, and if you distill that, our personal business banking, retail banking is growing very nicely at the asset side, and we've had some big inflows and outflows on the CIB side in the larger corporates. On the liability side, we have dropped our liabilities slightly during the quarter, particularly compared to the fourth quarter, and that frankly is a bit of balance sheet restructuring for us. As you're aware, we are highly liquid, and we have spent the quarter, particularly as interest rates have come down dramatically on the liability side. We've restructured a lot of our longer dated and higher cost type of liabilities. Outside of that, the capital markets have shown some nice recovery during the quarter, and clearly we've got a number of our businesses that are directly or indirectly reliant thereon, and we've seen some good growth in their incomes coming through. So the top line income growth has come out of custody, stockbroking, corporate finance and businesses like that. In addition, in our global markets business last year, you will recall, first quarter was the FX market was highly volatile, and good revenues just on terms of volume and activity were made last year, which obviously haven't repeated this year. It's been a much more stable currency, but we have seen increased income coming out of fixed income. So a bit of a mixed bag, but all in all satisfactory for us.
Of course, I mean, you've highlighted the number of segments that you're involved with across the board. I want to hone in specifically on the retail segment and looking at what's your strategy moving forward to actually develop the retail segment of your business moving forward?
Two primary things. The first is that we are growing our network very quickly, i.e. our branch and our other channels, ATM networks, rapidly. During the first quarter of this year, we would have put in another 30 branches from January through to the end of April. So we are continuing to invest in that, which clearly gives us certainly presence on the ground. And in addition, we are looking at developing new sectors and new products. We've made some great inroads into some of the unbanked areas. Our trader market activities, which we piloted during the course of last year, we are starting to roll out actively across all of our branch network. So it's a combination of ensuring that we have both physical networks and ensure that the products that we develop for the particular sectors are strong.
Looking at loans specifically, because this is the area of contention right now, it's an area where, of course, banks have become a little bit more conservative in terms of their approach. Let's take a look at what you're forecasting in terms of loan book growth, where it's grown, 2% over this quarter. What's your strategy in that regard moving forward, and what sector or companies are you looking to lend to moving forward?
Lisa, we do have a growth strategy in terms of our risk assets and our loan book in particular. Yes, the first quarter might have been slightly slow, but as I said, there's the net effects to that. We continue to grow our book across both our corporate investment bank and in our retail banking. We are projecting something between a 15% to 20% growth for the year, and that we would see is coming from a number of sectors and businesses. As I said, personal business banking in terms of retail lending is growing nicely. In particular, there is the business banking sector, which we think has tremendous opportunities in Nigeria. And in addition, our corporate investment bank is growing its lending business on top of its transactional and collections businesses, which again we're making good progress. So we have liquidity. We are looking to grow our book, but we also have very strict risk criteria and risk management processes. So we're going to do that hopefully in a sustainable way.
Let's take a look at those risk management processes here, because we know that the regulatory environment in Nigeria hasn't yet adopted Basel II, but we have got Stanbic IBTC looking at venturing down this path on its own, despite the fact that the host regulator hasn't brought this on stream yet. Is this a critical component of your risk mitigating strategy moving forward?
Surely it is. We've adopted the Standard Bank Group practices in terms of all of our risk management, and that includes your capital management and capital ratios in terms of Basel II and provisioning requirements. IFRS in terms of our accounting requirements. Also, we actively report on that for the group purposes. So yes, it does form a key pillar, and certainly we continue to implement across our organisation.